First Republic Bank was once a trusted partner for many wealthy individuals and businesses, who valued its personalized service and low-interest loans. But in the past few months, the bank betrayed the trust and loyalty of its customers by charging excessive fees and interest rates, while failing to protect their deposits from a massive bank run. The bank's troubles began when it faced a liquidity crisis due to the Federal Reserve's interest rate hikes, which made it more expensive for the bank to borrow money and lend it to its customers. The bank also relied heavily on uninsured deposits, which exceeded the $250,000 insurance protection offered by the FDIC. This made the bank vulnerable to customer withdrawals, especially after the collapse of Silicon Valley Bank and Signature Bank, which triggered a panic among depositors. To cope with the situation, First Republic decided to sell off some of its assets, including its low-interest mortgages, which were a key attraction for its wealthy clients. The bank also announced plans to lay off up to a quarter of its workforce, which totaled about 7,200 employees in late 2022. These moves were meant to improve the bank's balance sheet and restore confidence among investors and customers. But instead of stabilizing the bank, they backfired. Customers felt betrayed by the bank's decision to raise their interest rates and fees, while selling their mortgages to other lenders. Investors were skeptical about the bank's ability to survive and dumped its shares, which fell 75% last week. Even a $30 billion funding from a group of large banks in mid-March was not enough to save First Republic from collapse. On Monday, May 1, 2023, regulators seized First Republic Bank and sold it to JP Chase for $2 billion. The deal included almost all of the bank's assets and liabilities, except for some unprofitable loans and securities that were left with the FDIC. JP Chase said it would honor all of First Republic's insured deposits and continue to serve its customers. The failure of First Republic Bank was a shocking end for a bank that had prided itself on its reputation and customer service. It was also a devastating blow for its customers, who had trusted the bank with their money and their financial needs. By charging excessive fees and interest rates, while failing to protect their deposits from a bank run, First Republic violated the trust and loyalty of its customers and tarnished its image as a reliable partner.